This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, we've packed a number of shows together to give you some highlights. I know you're going to enjoy the show. Thank you for being with us today. Yosef, welcome to the show. Looking forward to diving in and learning from you and the listeners learning from you as well. Before we do that, give us a little more about your background. Why are you getting into real estate? Why did you jump into real estate? And from where? Like what industry would you do before?
Sure. First of all, Whitney, thank you very much for having me today. Very excited. A little bit about myself. I'm like a first generation Korean immigrant, father of two. I came here at the age of 18. I almost turned 18 when I came here. So this is new country with new culture, new language and everything. So every day from that point on, it's been proving myself in a new country, right? So fast forwarding, I became an attorney and thinking about that's a way to go to, become sort of a successful person in the US. But it was really not. I realized myself just trapped in a rat race. And at one point I started thinking and reflecting myself, is this a lifestyle that I wanted to pursue for the rest of my life? And I decided it's not. And that's around when I stumbled upon the book, Robert Kiyosaki, Rich Dad and Poor Dad. And exactly was describing my lifestyle as a rat race. I had 100% agreement with that. So I concluded that from that point on, I must become a business owner or an investor eventually so that I could build some sort of sustainable income stream with benefits, like tax benefits, so that I could support my family, right? In other words, being a W-2, if you stop working, that's the end of income source. And that's very risky. And so that's when I started looking into, okay, what kind of investment vehicles or other business opportunities are there? So I tried a little bit of stocks and mutual funds and REITs, whatnot, but nothing really threw me until I stumbled upon, again, this great website, biggerpockets.com by accident. And I started reading all the articles and started watching the YouTube videos. And the first two people I watched was Grant Cardone and Michael Blanks. So those were the guys, okay, don't even bother looking below 16 units or 32 units, go big or go big. So I studied about multifamily and I instantly fell in love. And I just thought to myself, okay, this is something that's doable as long as you have a great team and strategy into it. And that's how I started just falling in a multifamily.
Yeah.
And yeah.
No, that's
So
awesome. Especially being an immigrant and coming over and becoming an attorney. Obviously, lots of hurdles there that you had to cross, right? That are not easy. And so, congratulations to you and just making it happen and making so many things happen, being successful. And but so one question I thought of: why real estate though? Why not? You said what I like that you read Rich Dad Poor Dad amongst many of the listeners and myself included, and you learned that hey, you needed to be a business owner. Well, why not just open, say, your own practice as an attorney and maybe invest in real estate? So why become an operator or on the active
mhm.
side and not just focus on legal?
Well, more so in the beginning, I was looking to invest, right? I mean, okay, I could leave and open my own firm and start all over just from the ground up building. However, at the time, I was pretty comfortable with my position at the firm and I was making, okay, it's good money. So I didn't have an idea of leaving the firm from starting from ground zero and building my firm. And again, trapping myself into probably busier position. At the time, I was just thinking, okay, if I start my own firm, it's like for the next at least 5, 10 years, I think I would have to spend all the money back into the business and just getting busy myself. So that at the time, that was more of investor that I wanted to become versus business owner. So I was looking to the vehicles that I could invest. And that's why I started with the stocks where it's just entry level is really low, right? Because anyone just kind of try. But the reason why I came settled down on multifamily was basically real estate as a basic human, more so residential side, right? It's one of the basic human needs, like food, clothing, and apartment, right? House. So I saw definitely high demand there. And I, I see all this news about demographic shiftings. Baby boomers are downsizing. So instead of houses, They were going into the smaller places, millennials not buying homes. So there's a high demand for the rent and also like cash flows, right? That's one other thing. There's a multifamily apartment as a cash flowing asset where it's just, you can have like monthly or quarterly cash
Yeah.
flows.
No, that
Consistency is great.
makes
Right.
complete
So,
sense.
right. So, and also multifamily scalable than single families or duplex where we separate groups instead of you could have 20, 30 units under one roof. So considering all these benefits, that's when I said, what is multifamily is a great asset class to go into.
Yeah, speak to the transition, like how you've transitioned well, or maybe some crucial things that you did to be successful moving into multifamily or starting your own, real estate business.
Mhm. Okay. So when I just started, and obviously everyone should start that way, right? We do self-study, right? We got to know what it is like to become a multifamily investor. You got to learn all the jargons and all the terms, how things are being operated. I started learning all this from going into biggerpockets.com back in like 2019, right? So I was self-educating, but soon I realized that education is alone is not an equivalent to taking action. Right? I was just merely passively absorbing all the information from the website, watching the YouTube, but it was just so passive, right? So I had to make a kind of leap there from there. Like, you know what? I need more like hands-on guidance. I got to find a group or mentor from this point on. So that's what I did. I started inviting people up there, and I ended up joining the Jake and Gino group in early 2020. That was right before pandemic shuts down everything. I was so excited to go out and meet real estate people, but then they just shut it down. So I was just staying at home. But at the same time, I tell people that this was like a disguised blessing for me personally, because I really didn't have much work from my firm at the time for at least good half a year to close to a year. And I had spent a lot of time just digesting and studying at the same time, doing a lot of networking calls like this, one-on-one Zoom calls. So in 2020 alone, I did networking calls like over 200, and I stopped counting up to 200, all from Jake and Gino. And I also joined MIH Mastermind. And I know my friend Nicole was here like 2 years ago, and she mentioned about the same mastermind group and Jake and Gino. She and I, we met through Jake and Gino. So these are great people.
Yeah, they are great people. I've known Jake and Gino for a long time. I was at their first conference that they ever did, and so it's yeah. I think a lot of those guys for sure. I wanted to mention a couple things. No doubt, self educate. You joined Jake and Gino, also a mastermind. Like you were consciously surrounding yourself with people right ahead of you, right, so you could learn from. And something I just see people that want to go do this stuff, right? It's very similar to what I did. I did some of the exact same stuff when I got started. It's like educate, like join masterminds, join groups. So it's like meet as many people as possible. I went to as many conferences as I possibly
100%.
could, followed up with everybody I possibly could, and followed up again. It's just like building all these relationships over time. It's what the podcast did for us as well, meeting people like yourself and other people that I never would have met outside of like really pushing something like this. But something I love that you said there is in 2020, over 200 calls. And I just want the listeners to think about like that. If you're not taking action yet, if you're still self educating, like think about that and think about the things that can happen from having over 200 calls in a year, right? With other people in the space and just connecting and meeting. And so, what were some of the things that came maybe out of those calls that you didn't expect, or maybe you did expect?
Okay. So first of all, I had a clear goal, like for the network. In the beginning, let's say about 10 calls, I had no clear goals, right? I just joined just for the sake of meeting people because I loved meeting people. But I realized, unless you have a clear goal in your mind, that even if you meet amazing people, you're not really getting much out of that. Because in the beginning, because I didn't really have much background from syndication or even just generally real estate investing. I never had any experience, not even single family flipping or anything, right? So when I joined a call with this amazing potential partners, my thing was like, oh, what can I do for you? Right? Like, well, what can I do to add value to you? And basically later, I hear from them like, dude, if I don't know you, I don't know what you're good at. If you just ask me what you can do for me, it's like, are you adding another work for me to kind of get to know you? And then I got to tell you what to do. Come on, you should be better at this, right? So, well, they didn't say that, but that's sort of things that I started realizing myself, putting myself to the other side. Oh, if somebody just shows up and tells me like they want to add value, they will do whatever I tell them to do. What am I gonna be doing? Like, how am I gonna think? Like, I'm gonna tell them like, I don't know you, right? Like, basically, I can't tell you what to do. So I pull myself back out of that as I sat down and started writing down, okay, what am I expecting from each meeting? Like, and what can I tell them, as how can I promote myself to them so that they can see me as some sort of person who can add value to them, right? So I started writing down basically what I thought will be a role in a team. And there's somebody who has done a deal before, boots on the ground, capital raiser, deal sourcer, underwriter, and all that one by one. And then I started checking off the ones that I can be or it cannot be. And that was the process I did. So for example, I just started the game, so I don't have any experience. So that one is gone. I don't have a huge amount of net worth, so I can't be a net worth guy. Okay, that's gone. Okay, maybe I can underwrite a deal because I was learning that, so I live it off. Raising capital, I don't think I can do that myself right now, so I'll probably live it off. So you see that, like, sort of, I was reorganizing the roles in the order that where I could be most appealing to them. And one of the skill set was like, oh, I'm an attorney, so I could read documents, maybe review PPM, saving your time, and blah blah blah. I have high net worth friends here, doctors and lawyers, so I could probably help you raise a capital. So I have like I was preparing myself to promote myself at the same time. Also, obviously, you don't want two Yosefs in one team, right? You got to have somebody who can complement. And my biggest limiting belief in the beginning was because I live in New York City. Well, no way I can invest outside of my backyard. That was my initial limiting beliefs. Like, so I was looking things in New York, maybe New Jersey, like even a little bit of Connecticut, but I really didn't think about going outside of that. How can I trust others? You need lots of money to start and all that. But soon I realized by education and through this networking, you know what? Even if I have something in Connecticut and New Jersey, it's not like I could go there every day and look after myself. I gotta have somebody there. And if I have to find somebody anyway, why don't I find somebody in a market that number wise and make more sense? Right. So I started being further away from New York, going to Tennessee, KC. Eventually, through this networking calls, I met my first boots on the ground partner. And he lives in Kansas, near Kansas City. And that became where we found the first property and closed that first property in December 2020.
Nice. Congratulations. A couple things. Well, one big thing came out of it. You met this partner, right? I mean, that from taking that action, right? 200 calls, 200 plus calls, right? And so I just want a listener to be able to think about that. Okay, you found a business partner and ultimately found a deal, right? Made a deal happen because of all these
Yeah.
calls as well. I like how you said, hey, you listed, yes, and I hear this all the time too, about you ask people, how can I add value to you, right? And I'm guilty of that as well, and especially early on, it's like, well, asking somebody that it adds work to them to try to figure out, how how you can be used to add value to them, and so they don't want to put forth that effort, so they're just like, I can't think of anything, right? And so, but I
Mhm.
liked how you listed out all these roles and you figured out some that you were good at, or at least had started to learn about, right? So how did that
Yes.
conversation then change? Instead of saying, "How can I add value to you?" Did you say,
Mhm.
"Well, these are my skill sets. Do you need that on your
Mhm.
team?" Or like, how did you do that?
So instead of, well, a little bit of more background about my tactic towards the networking calls was I created two tiers of networking calls. One, with specifically those who are interested in my market or who are into my market, who could be my boots in the ground. And also another tier was just a general networking with anyone just to get to know them. because you never know where the deal will come from in the end, right? So, and initially what I did was before, that's how my approach was like, what can I do for you this time? I started a front. Hey, my name is Yosef. This is my background, boom, 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 a little bit of my journey. And then this is the role I could play, and tell me about your journey and see if there isn't any opportunity, a mutual opportunity that we could take on together. And they will talk about themselves. And they will just, from that point on, since they know who I am, I know who they are, our conversation go to like a little further to a more personal level, their family, because it's not only about the business, right? And it's also about like getting to know who they are, becoming friends, because we're all in that same, mentorship group. So I wanted to get to know them as well. And if at the end of the call, if I conclude that, oh, this is probably not the type of person that I want, but if in terms of skill set wise or in terms of role wise, but if I consider this person a good person, I'll leave a note there. And then when I do another call and I find somebody who probably going to be a good fit with this person that I already had a network with, I'll connect them. Right. Oh, I know this good guy who could be probably your boots on the ground. He's in a different market. So I couldn't have any opportunity together, but I think he's a perfect fit for you. So I'll connect them. And more. I did a lot of connection calls as well. That,
Uh,
and they will refer somebody to me too.
yeah, that is a great way to add value to people, right? And people do that for me now often, and I used to do more of that. But when I was, I guess, taking more calls and networking, now our team does more networking than I do. It seems at times now, but no doubt that's a lot of value, right, to people when like you find this person that has something that this person needs, or vice versa, or skill set, or whatever. Yeah, that's a great way to add value to people, is making those connections. John, welcome to the show. I'm looking forward to diving into your superpower because I feel like it's something that's so important in our business, and we want to learn from you today. But before we do that, and how did you get into the syndication business? What were you doing beforehand?
Well, thank you, Whitney. Appreciate the opportunity. Before syndication, I had a career in IT. I had a number of years in software development, software managing other developers, and had my own business for a number of years, and then was consulting for a while, and have just always been related to software. Tried to stay close to the technology, but then you kind of move into different fields that are but still related to it, and implemented software systems, a lot of real interesting IT and computer related consulting projects, but did that for quite a while until I migrated myself into real estate, into syndication.
Wow, awesome. So why not double down on your, your tech skills, right? Or all these years in tech, why not double down on that, or that business, or even that consulting, and just invest passively? Why jump in actively in syndication or commercial real estate?
A good question. I have always liked the things that had no ceiling to my opportunity. Passive investing is a great opportunity, and I love it. And it's for and I do a lot of it. It's for a lot of different types of people who are busy and have strong skills and professions of their own. But there is a natural upside limit. You're going to make what is projected, and maybe a little bit more. I like to know that I can do more to do better and to build more wealth. And looking around, I found real estate. I mean, my profession, yes, you grow, you build your income, and you can save money. You can put amounts of it aside and build your wealth that way and invest it into the traditional things, the 401ks, stocks, mutual funds, ETFs, all that kind of thing. And for me, I was looking for something more, an ability to use the skills and talents that I had, and to develop processes and tools, which I had become good at, and leverage these skills in a field that provided new and different and better upside opportunity for me. And I found real estate as the vehicle for that, starting off small, of course, and then building into large things. But I did it both together for quite a while, as most people do. It was like, how do I get out of my W-2 job? You start by holding on to your W-2 job and finding a way to do these other things in the times that you have available and figure that part out. If you have difficulty managing your time with a W-2 job, you're probably not going to do much better quitting your job and jumping into real estate. I mean, there are exceptions to that, of course, but you've got to be able to manage that part of your life.
Yeah, no, that's very wise. Very a good wisdom there. I appreciate that. Something I love that you said right off the bat, though, too, is because you like things that have no ceiling for the opportunity that you have, and I can so relate to that. I was with Kentucky State Police, and it's like if I wanted to promote, I was gonna make like $2,500 more a year for a worse schedule and more responsibility. It was like, wait a minute, or even that. It was like not much further I could go for 25 years, right? Or then federal agent. And it was like, man, in 3 years, I've maxed out my ceiling. It's like, what's next, And so then here come real estate for me, as well. I love that as well, that there's just no ceiling, it's like, what can you dream up or make happen? Let's talk about how you've used your skills to do just that. And your tech skills, no doubt, I could benefit from a few more tech skills myself, but I have to hire people, like yourself that have those skills often. But you have an ability to use numbers, consolidate numbers, gain information, right? I know. And let's dive in. What does that mean for you? And how, talk about how you've used those tech skills that you have, because I think many can relate to that, or some type of skill set that, man, it may be hard for them to see how they can use it in this industry.
Yeah. So I'll go through a few things that are related to the tech skills that I have and that I've utilized, but a few other discoveries in my own life from prior roles and job roles. One of them that I think that was key was I was a software engineer, and I went to work for a small company. I was working for a large company, a big project, one small piece on a big project, and then I went to work for a small company, and I was one of the principal engineers on a small software product and developing the product. And we sold it to customers, and the customers were just like ordinary people and like departments and various businesses, and the product had problems, and the customers were coming back to us, and they were saying, we spent all this money and this thing doesn't work and all that stuff. And everybody's heard that, but it was a painful lesson in how to take care of customers and how to interact with them and how to listen to their problems and to talk them through certain situations. And I mean, I've always had the ability to talk, but I've never really done much of it. Never been in a job prior to that where I had to talk someone off the fence, so to speak, and be able to bring them down and understand, and then go to work to fix the problem, understand what the problem is, and buy myself some time to fix it, and then fix it. And I did that on a number of occasions with various customers, and I mean, it's super fulfilling. It really is enjoyable. I mean, as you get it done, it's like building a software product. I'm so proud, and the product looks great, and I like what I did. But in this case, you're working with customers, and so that was one time. Other times we're working with people who are very good at sales and marketing, and realizing how, man, they can build a business because they're so good at talking with people. And these are not my tech skills. They're working as a tech person in a company that had a product to sell. And it's not like some hyper salesperson, but it's just that it's the marketing and nurturing relationships aspect of it, that not that I was listening to them and suddenly I could do that, but just I was appreciating the value of what they brought to that organization and how the organization could not have done what they did without that value. And then it's moving into I had my own business because I knew a product line and I knew a market, and I sat down and developed a software product for that market. And then I could go back to people who I knew and demonstrate it, sort of show it to them. Not really a full-fledged dog and pony show, but sitting down shoulder to shoulder, showing them how the software worked. And they became initial customers, and then building a business around that. And then it's all the aspects of building a business, the accounting and certainly marketing and finance and leading other people. The tech part of it was always there in the background, and I had to understand how different pieces fit together, and I had to think about processes, and is doing this thing manually over and over again really the best use of my time? Is this what I should be doing, or should I build something else around it? And then, as real estate came along, it's looking at, there are a lot of processes. Anybody who's done anything in real estate, investing on their own or buying homes or for rent or anything like that, there are a lot of different things associated with it, and anybody can guess a whole lot of what it is, but is there a way to, I would say automate it, but automate sometimes too strong of a word. At least you need to understand what you're doing, and know that, this is the way I did it this time. Next time, and there will be next time, I'm going to do it this way, the same way. It's like if it's 3 months down the line, I'm not going to have to try to remember what I did. I'm documenting processes, and I'm trying to get them better each time. And it's that whole mentality in real estate that you develop from, in my case, a technology perspective. The advantage that I had was out of a lot of IT consulting roles, you get to be expert at spreadsheets. Microsoft Excel is like, I'm in that 24/7, and you get to know. I mean, I did a lot of consulting at Microsoft, so naturally everybody used it, but you just develop a high proficiency, and so that's what I've taken into real estate as well. I look at software products, and I think, yeah, those are great products, but I can do the same thing at a spreadsheet, and then once I have, I can improve it and tweak it, and I've done that with my underwriting. I'd say that's probably the number one tech skill that I brought into real estate, is being able to compile my thoughts and my analysis and everything else about my business into spreadsheets. My challenge, of course, is that real estate is a team sport, and you bring in other people, and I have to show them spreadsheets. And if my spreadsheet looks like a bunch of garbage that only I understand, then it's really not doing the job. And so then I'm improving things like readability and simplicity, and boiling things down. What does this particular audience need to see, and what's the best way to present it? And so,
no doubt, that is a skill set that every real estate company needs on their team, right? I feel like every time I learn some more things about what Excel can do, I mean, I realize I've just barely skimmed the surface of all the things, that it's capable of. And thankfully, there's numerous people on our team that are a lot better at it than I am. Or we would be way behind on that front. But I want to jump into, some, underwriting specifically, and maybe some of those skill sets that you can help the listeners with. And, I know one thing you had mentioned beforehand is like things you do in underwriting that give you an advantage, right? And why don't we jump into a few of those?
Okay, yeah. One of them is my processes around rent rules. I've developed a process where I'm not just using some rent escalator number, 2.5%, 3%, 3.5%. What's the number? What's a conservative? Oh, I'm conservative. I'm only estimating 2.5% per year. That's a great way to do it, and most underwriting models assume that's how you're going to do it. But I'm digging deeper. I'm looking in a lot of rent comp analysis. I'm looking around, what are the other properties and units, similar units in terms of size, square footage, age, condition around that area? What are they renting for? What can they get? And I'm looking for renovated units too. What is an owner getting for a unit that's been renovated real nicely, and how renovated is it? As we all know, there's different scales to it. And so the rent comps are critical. What could I get if I'm going to spend $3,000, $5,000, $10,000 on renovating a unit on a property that I bought? What could the rent be for that? And that's information that you can, extrapolate. You can use it in a way that says, okay, here's the current rent roll. I got the rent roll from the owners, and the lease is up on this month, and I'm going to take that unit down, and I'm going to renovate it. And when I put it back up, this is the rent that I'm going to get for it. Doesn't matter what the rent was today. It could be that it's a $500 rent and the renovated units could be $800 because that's where the market is. And this particular owner didn't want to raise rents. They kept them low or whatever, whatever that story is, or that owner's been good at it. Their rents are already $725, $750, but even though market rent is $800, and I can look at that and say, I'm going to get $800 out of it once I renovate it. And then it's going to be at least at $800 for 12 months. And then I'm going to raise the rent by something, $30, $40, 3%, some number like that. I mean, that's all arbitrary. And I can model all of that. Each unit, each month, over a period of time in the future. And how many units can I renovate this month? I can renovate 3, I can renovate 8 or 12 or whatever that number happens to be. I can model all of that. Then I can come up with rents per month and roll it up by the year, including the vacancies driven by renovations. I'm taking it off the market and have more realistic numbers for what those rents are this coming year, the next year, and the following year, and use those in my underwriting. That's
your assumption becomes less of an assumption. Maybe
yes.
It's still an assumption, but it's more accurate, right? Than maybe just throwing in a percentage in there.
Exactly. Right. And with partners, if I'm sharing this, I've got general partners and they need to be bought in. If what I'm doing is hocus pocus or makes sense, or I made a lot of unreasonable assumptions, then they're not going to buy in, as they shouldn't. And I wouldn't buy into theirs. They need to understand it so that they can make critical feedback. Like, John, you can't assume that you're going to get 5 to 7% just nominal rent increase out of this unit. That's too aggressive. And then I can dial it back. Whatever those assumptions are that I made that are questionable, they can call me out on it and change them and model it again and see if the property still works.
Speak to where you're getting the data from, right? And finding good data, right? Finding the good data and pulling the information out, that is most accurate, I guess, or where you get it, how you use it.
Lots of different types of data. There's market data, demographic data. There are several good sources for that. I love to see population growth and jobs growth. I like to see household incomes, average home sale prices. A lot of that data is from citydata.com. I like to see job growth numbers from Bureau of Labor Statistics, and I track all that, where the rates of increase on those numbers. And even though there's a lot of inaccuracy about it, but that's my main source about market data. With respect to rent comps, the rent comp data is a little more difficult to track. There are a lot of good websites out there. You can look at the data from an underwriting report from CoStar. You can look at data from Rentometer, and go to a lot of these websites, Zumper, Zillow, Trulia. They all have data to a certain degree. There's a level of inaccuracy to all of it, though, and you have to be fully aware of it. CoStar gets the data as well as they can. I mean, they're what do they own? Apartments.com, or they own some assets like that where they have sources of data and they can see what the apartments are, but you don't know what condition the units are. You don't know about availability. And their data is somewhat old. Rentometer is even worse. I mean, I have a subscription and I use it, but it's just like a quick snapshot. I look at the comps that they're using, and they might be 8 or 10 months old. And it's just, I mean, it gives you a sort of a feel, but it's really not something to base your numbers on. Truly, the best rent comps are from 2 sources. One is property managers in the area, and you could talk to them. You're thinking of buying, you come across as credible, they will share information. They will let you know where the rents should be, and their information is good because, I mean, if they've got enough properties, they know what the rents are. The second is that I will have somebody call around to the comps, and I have a set of questions, and I have a virtual assistant or somebody on my team do it and call the comps. They are a renter. They got to come across as a real renter, not just like the neighboring property manager who's doing a survey. They got to come across as a legit renter and ask these questions and try to find out where the rents are, what are your amenities, what other fees do you have, and do you have something now? I need a 2-bedroom unit, and do you have anything? And oh, we don't have it right now, but we will in January, February. It's coming right up, and that tells you that that they are full. Whatever rents they're charging, maybe they're not even high enough. That's great information. What condition were these units just recently remodeled? Those are conversations that you have that you're not going to read in CoStar or learn from a property manager.
Love the detail there, and even having your assistant, somebody do that, right? So you're not even having to take the time to do that, but you're outsourcing that in a way that you can get much more accurate data, right?
Yes.
I mean, just much more accurate. I love that, and taking the time to make that happen. Speak to, give us maybe a tip or on how you're successful at getting as much information from brokers as well. That you need.
Only through long-term relationships. You're not going to get any of the brokers, let alone the good ones, to share that good information with you in the first couple of phone calls to them. This is something I tell everybody who's starting off, is that you need to start developing those relationships. Call the broker, and they will recognize you as somebody new to this process. And there's no getting around it. It's totally fine. A broker might say, they might not give you the time of day. They might say, I don't think we're a good fit, or whatever. They might just blow you off, but others will talk to you, and you'll come up with some brokers who are knowledgeable in the market. Most of them are very respectful. I shouldn't say it. I mean, they are. They want to help. They're not going to spend an hour on the phone on the first phone call with you, especially when they're not sure if you'll even move forward on something. But you develop those relationships. You talk to them for a little while. They ask you a few questions, and then 3 or 4 weeks later, you're calling them again and say, "Hey, remember me?" and blah blah blah. You remember some details about them, like what school do they do? What are the hobby go to? What are their they follow the local football team or basketball or whatever it is, or anything about their kids that they mentioned, something that you can call up with them, and they'll remember the conversation, and little by little the conversations get better, and then they start answering, like, the first thing they say is, "Hey, John." They can see my name on the whole caller ID, but I realize that they remember who I am, and that's a great position to be in. And my criteria, my buy box, or the things that I look for in properties, has changed over time, and you just need to remind them, and they'll say, like, "Well, now what are you looking for again?" And I tell them, and it might be different than what I said before, but just renewing those things, and you have these conversations, and then they send you things. So there's different kinds of brokers. There are ones that are really not out knocking on doors or talking to owners, and they might know their market, but they're more likely to pull up listings, local listings of properties. They're good people to talk to. Granted, you're not going to see anything, and you might get the same information for more than one of them, but they're still worthwhile. Certainly, the brokers who list properties are at the top of the pack. They're the ones that you want to know and hear from. And you want to hear about good deals, about good properties coming to the market as early as you can. And the other thing I would say about brokers is that they're not always great about following up with you. I've had so many phone calls where I'm talking to them, and they know me. I've talked to them a number of times, and I describe it, and they say, "Oh yeah, I just happened to have this one that you knew what my criteria was. Why didn't you send that to me?" And so I hear about things because I'm being proactive with brokers.
Yeah, no doubt about it. It's and I like what you said. The first call maybe 5 minutes, and that's okay. But it's the following up, right? And staying in touch. And one thing I wanted to ask you, John, with your tech skills too, before we move to a few final questions, is how do you see or even use AI right now in connection to Excel and even underwriting, or are there ways you think to do that now?
I am very interested in AI. To be honest with you, I've not spent a lot of time using it. Where I think AI offers the best opportunities is in analysis of markets and analysis of the renter base, and being able to tell whether a renter is truly qualified or not, whether they've got issues in their background that I think you can look up and find and be able to the whole term paths of progress. What's the path of progress? How is that influencing market values and what people are doing in a neighborhood? AI is so good at collecting information from so many different sources. They can see things coming. I mean, I've had deals where I've talked to brokers and they've told me that this broker was just at a city council meeting and they approved a permit or a business, a new business coming to the area. And this is going to manufacture medical devices, and it was going to be built in this one patch of vacant land. And I mean, nobody knew it was coming. And they'd be employing like 2,000 people in the next 2 or 3 years. And not many people were at this council meeting. And so the broker heard it, shared it with me. It's those kinds of things that AI can pick up on.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.